So the hot topic of the month is definitely the 2024 federal budget. And in today's video, we'll be going over the economic outlook for the Australian economy. So we know that the current picture is that we haven't been experiencing that much economic growth, and that's not only seen in Australia but the worldwide economy. And we know that our labor market has been quite tight. There's been very low levels of unemployment, and hence has had an inflationary pressure on wages, and we've seen them going up, which has definitely influence the level of inflation, the prices of goods and services within the economy. And because inflation has been quite high, the RBA has been trying to temper that with monetary policy. And we've seen, that 13 interest rate hike since May 2022. And so from the current budget and the current economic outlook is that we're expected that GDP will start to recover in the next year or so, and we'll experience modest growth of about 2%. And so with the budget, the current fiscal policy, there's a lot of expansionary policies that will be implemented to help bolster the economy, to help improve GDP and economic growth. For the labor market, we are going to see it kind of really peak at its fundamental metrics with unemployment at 4.5%, which is kind of normalizing to its more historical averages. And then we have wage growth also peaking at this 4.5%, but hopefully will be tapering off, so that will have less of an inflationary impact on the wider economy. Inflation is expected to reach its 2 to 3% target rate by mid 2025, which is great news for mortgage holders. So hopefully interest rates will eventually decrease, although the expectation is that it will probably be on hold for the remainder of the year, and perhaps the reduction will happen till the end of the year or early next year. But with that said, you never can really predict these things. And with the overall federal budget being very expansionary, it's going to have an inflationary impact on the economy. With these tax concessions and putting more money into people's pockets, it's going to cause an inflationary impact. And so there is a risk that may increase inflation, and interest rates might have to increase before they decrease. So that was a little bit of a snapshot, and I hope that helps.